Hey guys, welcome back to my YouTube channel. Have you got a burning question about how VAT works? In this video, I'm going to be going through everything there is to know about VAT. Or if you're not VAT registered, you're in the right place to find out how to prepare your business before reaching the VAT threshold. Let's go. These things can change, so it's my job as an accountant in the UK to keep on top of these changes. The best way I can do this is to keep you updated in the description below, so please do check that out. In this video, I'm going to be talking about everything from when to register, how to register, the benefits of registering early, so voluntary registration. I'll talk a little bit about exceptions, so if you temporarily go over the turnover increase, and all sorts of other things to do with VAT. Let's get straight into it. VAT is a consumer tax on most goods and services sold in the UK. So people who pay this are the individuals purchasing the goods and services. This means if you are a VAT registered business, you are just part of the chain and not actually paying it, simply passing it along. As a VAT registered business, you are basically acting as a tax collector for the government. VAT is calculated on a percentage and the standard rate is 20%. Now we pay this on a day-to-day basis on lots of items we purchase without even realising. So I'm going to give you a real life example. So you'd normally sell your courses, say, for £100. So if your business makes a sale of £120, including VAT, you will then hand that £20 of VAT over to HMRC. Normally every quarter. What you or your business is able to do is offset any VAT you've already paid on your expenses against the VAT you're about to hand over to HMRC. Basically, you're reclaiming the VAT on these expenses, even though it doesn't feel that way, as you'd normally still pay over some of the money to HMRC. It's really good to remember that you would still probably be paying HMRC a lot less than what you've collected on HMRC's behalf. This is a really good point to say. When you collect money on behalf of HMRC, you should always be putting it aside. This is not your money. Yes, you can get a VAT refund if you're spending more money on the VATable goods or services than you're making. This is common, say, for startups who could be stocking up at the beginning of their business or investing more in expenses to get the business running. But when should you register? You need to register for VAT when your VAT taxable turnover is over £85,000 in any rolling 12 months, or if you believe it's going to exceed this within the next 30 days. It's really important to note that this is a rolling 12 months. So it could be any period, not just your financial year. So say you're working it out from January 22 to December 22. When we then go into the next month, so January 23, we take off the first month, January 22, and so on. The £85,000 is everything you sell that is not tax exempt. So tax exempt is very different to zero rated. Zero rated is still taxable. It just so happens that the taxable rate is 0%. Exempt goods can include insurance, finance, credit, education and training, fundraising events by charities, and subscriptions to membership organisations. The list goes on. You'll be sent a VAT registration certificate when you register with your VAT number on it, along with details of when to submit your first VAT return and make payment. It also shows your effective date of registration. Your effective date of registration is the date you realised you went over the threshold, not the date your turnover went over the threshold. You need to register at the end of the month in which you have gone over the threshold. Your effective date of registration is the first day of the second month after you've gone over the threshold. It's important to note that whilst you have applied to become VAT registered, you cannot charge or show VAT on your invoices until you actually receive your VAT number. However, you'll still need to pay the VAT to HMRC for this period. So here's a little tip. You should increase your prices to allow for this and tell your customers why. Then, once you have your VAT number, you can reissue the invoices showing the VAT element. But how do we register? The best way to register for VAT is online on the HMRC website. By doing this, you will register for VAT and create an online VAT account, aka a government gateway account. You'll need this to submit VAT returns to HMRC. You can assign an accountant to then become your agent, who will then be able to submit your VAT returns on your behalf and deal with HMRC for you. When you receive your number from HMRC, you can then sign up for your online VAT account. There are a few rare occasions where you cannot apply online. So if you want to apply for a registration exemption, or if you're joining the accrual flat rate scheme. But for most people, these won't apply. You should receive your VAT registration certificate within 30 days. You will be able to see this on your online VAT account. When registering, you'll need to provide details like your turnover, business activity, and bank details. Your registration date is known as your effective date of registration. You'll have to pay HMRC any VAT due from this date. If you take over a VAT registered business, you may need to register for VAT. Something that's really important to talk about is if you register late for VAT, you must pay what you owe from when you should have registered, basically. You may also get a penalty depending on how much you owe and how late your registration is. There's a deregistration threshold where if your taxable turnover is less than £83,000, you can then deregister for VAT. You must follow the rules for making tax digital for VAT. So this basically means that you need to use the software to submit your returns directly to HMRC. HMRC expects you to keep all of your records for 6 years plus the current year. Now let's talk about the benefits of registering early for VAT or voluntary registration. You can register voluntarily if your turnover is less than £85,000 unless everything you sell is VAT exempt. Registering for VAT early will still give you responsibilities. From your effective date of registration, you must charge the correct amount of VAT on all of your sales. You must also pay any VAT that is due to HMRC, submit VAT returns and keep VAT records and a VAT account in HMRC. There are a number of reasons why registering early for VAT could be beneficial. Some of these reasons include: you can claim the VAT you paid on certain expenses made before you were even registered. If your suppliers are VAT registered, you'll be paying the VAT on their invoice anyway. When you become VAT registered, even if it's voluntarily, you can then reclaim these back from HMRC. If your competitors are also VAT registered, it makes sense to be VAT registered yourself. It can also make your business seem more credible because most VAT registered businesses have a taxable turnover of £85,000. There are many VAT schemes which can be really beneficial for your business, and it depends from business to business. So make sure you're asking your accountant what is the best scheme for yourself. Reasons to not go voluntarily VAT registered. If your competitors are VAT registered, it could make your prices more competitive without VAT. If your customers are people, so not businesses, they may be price sensitive as they can't reclaim the VAT. So they could be more likely to go to somebody who is not VAT registered. This is also the same if your customers are businesses, but if the businesses are not VAT registered. So to them, it's paying an extra 20%. Right, let's do another practical example. So say for your online courses before, right? Let's pretend that currently you're not VAT registered. So you've got sales, so your online course that we were saying, of £100. We've got costs, so it might be, I don't know, the course platform, right? Let's say £60. But that £60 is made up of £50 plus £10 VAT, but we just see it as £60, giving us a profit of £40. Now, let's run that same example as if we were VAT registered. So the sales, so our online course, will now be £120. So this is £100 plus £20 VAT. Our costs for our course platform is the same, it's £60, so the 50 and the 10. And our profit this time is £50. To pay to HMRC, we then have £10, which is our £20 that we've taken minus the £10 that we were able to reclaim. Instead of giving HMRC the full £20 that we collected from them, we first deduct our VAT on our reclaimable expenses, reducing the amount that we pay across to HMRC to £10. It's important to note, you can charge your customers the £100 still if they're price sensitive consumers, say. However, I wouldn't recommend this, as you're then reducing the profit margins, and basically your sale would then become £83.33 plus VAT, right, to make the £100. And your profit would reduce to £33.33 instead of the £40 that we were receiving before. So summarising, I wouldn't suggest soaking the VAT up in that price, as ultimately you're going to be earning a lot less money. Exceptions. So if you've temporarily gone over the 85,000, what shall you do? You're going to be panicking. Let's go. So you can apply for a registration exemption if your taxable turnover goes over the threshold temporarily. Don't panic. You just need to write into HMRC with evidence showing why you believe your taxable turnover will not go over the deregistration threshold, which is the 83,000, in the next 12 months. HMRC will then consider your exception and write to you confirming if you get one. If you don't get the exception, they'll register you for VAT. So please, 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 I can't stress enough, do remember to always check your rolling taxable turnover every month if you're nearing the threshold, okay? This is really easily done on Xero. Xero is a fully Making Tax digital compliant accounting software to help you run your business by sending invoices, creating expense claims, viewing reports, and helping you get paid quicker. It has a large variety of apps that you can choose from in the App Store, so any apps that you currently use can integrate seamlessly through Xero's App Store. HubDoc is used for any manual data entry, so these can include any kind of receipts and invoices as attachments on your transactions in Xero. You can also have fixed assets and inventory directly through Xero. Xero's main dashboard is really user-friendly. So it has your bank account, cash in and cash out, accounts to watch, bills that you need to pay, and invoices that need to be paid to you. Thanks Xero. Back to the video. Get in touch. We'll show you the Xero reports you need to pull to keep an eye on this information. Situations can be much more complicated with VAT, and it really does depend on your particular circumstances if they differ. You can also have different VAT schemes, as we've spoken about a little bit. Today I've stuck to the standard rate scheme, however other schemes such as the flat rate scheme could be beneficial for your business. So it's always best to seek professional advice from someone like myself, an accountant. Also, always make sure that you're claiming for VAT on items that you legally can. There's lots of rules around what you can claim VAT on and what you can't. The best way you can check that what you're claiming VAT on you actually are allowed to claim back is to either hire a bookkeeper or an accountant, or speak to somebody who knows the rules. We know these rules inside out and we will process them accordingly. Thank you so much for listening. I really hope that's given you an overview onto everything VAT. If you have any questions, pop them in the comments down below and I will do my best to answer them for you. Please do hit the like button if this has helped in any way at all, and please do subscribe to my channel. It means the world. Thank you so much for all your support, and I will see you very soon. Bye.